Okay, so if you're tracking the energy transition, particularly across Asia right now, you really have to be looking at BANPU.
Absolutely. For decades, I mean, they were synonymous with coal, the coal king, right?
Exactly. Just this huge company identity, profits, everything tied up with coal, a very, very volatile commodity.
And that's the core issue, isn't it?
Yeah.
That reliance, it created an existential challenge for them. We're basically watching a company realize the music stopped, or at least changed tune significantly.
Yeah, and they're responding with this really radical strategic overhaul. I mean, this isn't just moving deck chairs around.
No, not at all. This is fundamental. They're dismantling the old structure, really trying to survive and maybe even thrive in this new world pushing towards net zero.
Right. And the headline story, the massive thing everyone's talking about, is this historic restructuring. The full merger with their power generation arm, BPP. The plan is to actually dissolve both BANPU and BPP as we know them and form a single brand new entity, a new company. It's a complete corporate reset, signaling just how serious they are about this change.
It really is.
So our mission today, for you listening, is to give you the complete picture, a shortcut, really. We're going to unpack the nuts and bolts of this merger. It's complex.
It is?
We'll look at the finances that kind of force their hand, specifically that crucial Q2 2068 data. So that's Q2 2025 for most of us.
Yeah, the numbers that really highlighted the volatility.
And then we'll evaluate, does this big move actually set them up for a more sustainable, less bumpy future? Is this the answer to the energy transition challenge?
And I think what's really critical to get here is the goal. It's measurable. This isn't just, a PR exercise or rebranding.
Good point.
The main objective is financial. It's about increasing the share of their profit, their EBITDA, that key metric that comes from businesses outside of coal.
Right. Shifting the balance.
Exactly. This merger, it's the tool. It's engineered to give the combined group the focus, the capital efficiency, and frankly, the agility they need to actually deliver on their strategy, that energy symphonic strategy.
Okay, let's pause there. Energy symphonics. We've heard BANPU use this phrase for years, right? But now with this merger, it feels like it has to become real, operational. What does it actually mean day to day?
Yeah, it can sound a bit like corporate speak, can it? But basically, it's about three pillars working together in harmony, like an orchestra.
Huh.
You've got the energy resources.
Right.
That used to be almost entirely coal. Now it's shifting hard towards natural gas, and they're even looking at future stuff like nickel.
Got it. Pillar 1, resources.
Pillar 2 is clean power. This is where BPP really comes in. Their expertise in generating electricity, both traditional gas plants, but increasingly renewables too.
Makes sense.
The third pillar is smart energy solutions. This is the tech side. Things like battery energy storage systems, BESS, which are huge now, and carbon capture, CCUS.
Right. The enabling technologies.
Exactly. So the merger, what it does is it knocks down the walls between these pillars. Capital, management, ideas, they can flow freely. It's about creating synergy, making the whole greater than the sum of its parts. The goal really is making 1 + 1 = 3 in terms of speed and creating value.
Okay, that clarifies the why behind the structure. Let's dive into the how then, the merger mechanic.
Right.
Because this isn't just BANPU buying BPT, it's, as you said, more fundamental.
It really is. Legally, it's a full company merger under the Public Company Limited Act. And the key thing to understand is the consequence. Both BANPU and BPP, the existing companies, will legally cease to exist. They're dissolved.
Wow, so just gone.
Poof. And the single new company emerges. And it instantly inherits everything. All the assets, all the debts, the rights, the responsibilities, everything from both BANPU and BPP. It is genuinely a clean slate from a legal perspective.
And the driver for going through all that legal complexity, it ties right back to energy symphonics, doesn't it?
Absolutely.
Yeah.
Internally, it's about unlocking value, getting rid of the duplication, the complexity you inevitably get when you have two listed companies, two boards, two management teams, trying to work in increasingly integrated areas.
Streamline.
That's the internal logic. But externally, and this might be even more important for you as an investor, it's about clarifying the story, aligning the company clearly with the energy transition.
How so?
Well, the market, rightly or wrongly, has tended to just see BANPU as a coal stock, even with BPP growing its clean energy side. This merger forces the market to look at one single entity, one that's explicitly focused on those future growth pillars, gas, renewables, batteries. It makes that non-coal profit share much more visible.
Okay, timeline. This isn't just talk, it's happening now. We know the shareholder meetings, the EGMs, are set for January 29th, 2026.
That's right, a crucial date.
And the whole thing should be wrapped up, the new company fully operational, around the third quarter of 2026. So relatively soon, really.
Yeah, things are moving quite quickly now. And it's worth looking at what this new company will actually look like, financially speaking, the capital structure.
Good point. What are the numbers?
So, post-merger, the new company will have a total paid-up capital of just over 40 billion Thai baht, about 40.5 billion.
Okay.
And that's represented by roughly 4.05 billion shares, with a par value of 10 baht each. That's the foundation.
Now, the really critical part for existing shareholders, the share swap ratios. This is where you see how they're valuing the different parts of the business.
Exactly. This tells the story. So if you hold BANPU shares now, for every one BANPU share, you get 0.35575 shares in the new company.
Okay, about a third of a share.
Right. But if you hold BPP shares, for every one BPP share, you get 0.74615 shares in the new company.
So significantly more, almost double the conversion rate compared to BANPU shares.
Precisely. And that ratio, that difference, it's the core message here. It's explicitly saying that BP's assets, the power plants, the clean energy projects, the future growth potential are being valued much more highly, almost double the weight compared to the remaining legacy BANPU assets, which include the coal mines and some of the gas.
So the new company's DNA is intentionally weighted towards BPP's side of the family, so to speak.
You could say that. They're signaling very clearly. The future value, the growth engine, is that BPP portfolio. That's what will drive the clean power and smart solutions pillars going forward.
Makes sense strategically. But there was another twist, something that needed immediate cash, that pre-merger general offer, the tender offer for BPP shares.
Ah, yes, the tender offer. That was a pretty bold move financially.
Explain that. What was the purpose?
So BANPU launched this offer to buy up the remaining BPP shares held by the public before the shareholder vote, the EGM. And they set the price quite high, at 13,000 Thai baht per share.
13 baht. Why do that? Why spend the money up front?
Well, several reasons, but honestly, it's about BANPU putting its money where its mouth is. It streamlines the ownership, gets more BPP shares under their control, and reduces any potential roadblocks or friction ahead of legally dissolving BPP. It simplifies things.
So paying a premium to smooth the path for the merger?
Essentially, yes. But it's also a statement. They're signaling to everyone, the market, their own shareholders, that they believe those BPP assets are worth at least 13 band per share right now, considering the future growth.
Does that 13 band price create a kind of arbitrage situation? Does it add risk or volatility leading up to the merger?
Oh, it definitely adds short-term volatility.
Yeah.
That 13 band acts like a floor price for BPP shares leading up to the offer closing. But fundamentally, it's about conviction. Yes, it's expensive, but management clearly decided it was a necessary cost.
A cost to simplify things.
Exactly. Simplify the shareholder base, make the merger vote cleaner, faster. It helps them get on with deploying the energy symphonic strategy without getting bogged down. It's a cost they were willing to pay for speed and certainty.
Okay, that sets the stage for the merger itself. Now, let's pivot to why this felt so urgent. Let's look at the financial picture right before this all kicked off, that Q2 2068 or Q2 2025 performance. That really seemed to be the catalyst.
You're absolutely right. Those Q2 numbers, they were the immediate trigger, I think.
Yeah.
BANPU reported a net loss of 945 million baht. That's about, what, 28.5 million US dollar loss?
And that's compared to a profit the year before, right?
That's a substantial profit, yes.
Yeah.
So it was a big swing into the red. And for the first half of 2025 overall, the net loss was even bigger, 1.4 billion baht, or around $43 million US. When a company once called the Coal King posts numbers like that, yeah, the market gets nervous.
So the immediate reaction must have been, oh no, coal prices collapsed or operations fell apart. How much was down to coal prices?
Well, the coal price environment was a factor, definitely. Market prices were down, and that was cited as a key reason. Their coal EBITDA dropped significantly, about 32% in that first half.
32%. Ouch.
Yeah. And that's despite them actually managing to sell more coal and cutting costs internally, so they were running the business better, but the external price pressure was just too strong.
Okay, but here's the really interesting part, the twist. That coal price drop, while painful, wasn't actually the biggest single reason for that headline loss number, was it?
No, it wasn't. And this is the aha moment, as you say, the thing that separates an operational issue from, well, an accounting issue. The The biggest drag on the bottom line, the thing that caused most of that reported loss, was a massive unrealized foreign exchange loss.
Unrealized, meaning not actual cash loss.
Exactly. It was a non-cash item, totaling $75.17 million in that second quarter alone.
75 million, just from currency fluctuation.
That's from currency. It was caused entirely by the Thai baht suddenly getting much stronger against the US dollar. It appreciated by about 1.37 baht in just that one quarter.
So hang on. If you mentally pull out that $75 million non-cash Forex loss, which didn't actually drain their bank accounts or stop operations, the underlying business performance looks very different.
Drastically different. The underlying operations were still generating cash despite the coal price headwinds.
Why didn't they hedge against that currency risk more effectively? And why is a non-cash item like this such a headache? It makes the headlines look terrible.
It's a huge communications challenge. Look, they do hedge parts of their business, like commodity prices and some debt. But the speed and the sheer scale of the baht's move against the US dollar in that period was extreme. It just magnified the accounting impact when translating their foreign assets back into baht for reporting.
So it's an accounting rule headache.
Pretty much. It legally forces them to report that big net loss, which scares people who just read the headlines. Management stressed that cash flow was okay, operations were strong, but it's hard to get that message across when the main number is negative. It just highlights how external factors you don't fully control, like currency swings, can totally mask your real performance.
Okay, so coal revenue was down, impacting the top line. But what about the mix of revenue? Did that show why the merger makes sense?
Yes, absolutely. Total sales in Q2 were about $1.24 billion. Now, coal revenue, year on year, dropped by nearly $200 million. That's the vulnerability right there.
The concentration risk.
Exactly. But, and this is the key point, revenues from their other businesses actually went up in that same period.
Oh, interesting. Like what?
Gas revenue was up $37 million. Power and steam revenue, mostly from BPP, was up $4 million. And their other businesses, like trading, added $86 million.
So even in a tough quarter dominated by Forex losses and lower coal prices, the non-coal parts of the business were growing.
Slowly, but yes, shows exactly which parts of the business they need to scale up faster. It perfectly justifies the strategic logic of the merger, lean into the growth areas.
Okay, so Q2 was rough, largely due to that accounting volatility, but volatility, even if it's just on paper, spooks investors. How's management framing the outlook for the second half of 2025 leading into this merger?
They're definitely putting on a brave face, sounding quite optimistic, actually. They expect the second half performance to be significantly better than the first half.
What makes them so confident?
They're pointing to a few things. First, they saw signs that coal prices started to recover a bit in Q3 2025, which helped stabilize revenue. Second, and this is important, they've reduced their exposure to volatile gas prices. They've locked in prices for 60–70% of their natural gas sales for the rest of the year.
Okay, so locking in gas prices provides some stability there. What about the currency nightmare?
They're expecting the baht to stabilize, maybe around 32.4 baht to the US dollar. If that happens, that huge non-cash Forex drag should disappear, or at least shrink dramatically.
And operationally?
They highlighted cost cuts. They managed to achieve a 10% cost reduction in the first half of the year, and that provides a permanent buffer, helps the margins regardless of external prices.
Right, but after such a big Q2 loss, driven by things partly outside their control, why should investors really believe this optimism for the second half? Is hitting that full-year EBITDA target, what was it, $1.2 to $1.5 billion, realistic?
That's the multi-billion-dollar question, isn't it? Look, the confidence isn't really based on hoping coal prices soar. It's grounded more in the certainty of that hedged gas revenue stream and the stability of the long-term contracts BPP has for its power plants.
So relying on the non-coal parts more?
Essentially, yes. Management's bet is that Q2 was an anomaly, skewed by that extreme currency move. They believe the core cash-generating ability of the business, including the U.S. gas assets they've been integrating, is still strong enough to pull the full-year average back towards normal levels. And the merger, that's the long-term insurance policy, to reduce this kind of volatility by growing those stable parts much, much faster.
Okay, that makes sense. The merger isn't just about structure, it's about accelerating the shift to more stable earnings. Let's talk about how they're accelerating that shift. The strategy, the future growth pillars, energy symphonics in action.
Right, because this transition, it's not just talk. It requires massive investment. If the merger provides the new structure, these big investments are the engine that will actually drive the change.
And the most immediate, really significant investment we've seen is focused on natural gas and the associated carbon capture tech, mostly through their U.S. arm, BKV. Let's start with the Bedrock deal.
Yeah, the Bedrock acquisition is huge. It's really the cornerstone of bolstering that energy resources pillar, shifting it towards gas. In August 2025, they finalized the deal to buy Bedrock Production LLC for $370 million US. That's nearly 12 billion Thai baht.
$370 million. What exactly did they buy in Texas?
They bought assets in the Barnett Shale, which is a very well-known, productive natural gas field. Specifically, they got upstream assets, that means the wells, the production side getting gas out of the ground, and also midstream assets, which involve processing the gas and moving it.
Okay, so upstream and midstream, what does that do for BKV strategically? And can you explain terms like 1P reserves for listeners?
Strategically, it significantly boosts BKV's scale and resource base. The deal adds about 108 million cubic feet per day of gas production capacity. That's a lot of gas. But perhaps more importantly, it adds massively to their 1P reserves.
1P.
P stands for proven. So 1P reserves are the gas resources that engineers are virtually certain, based on geological data and technology, can be commercially recovered. Bedrock added roughly 1 trillion cubic feet to BKV's 1P reserves.
1 trillion cubic feet? That sounds enormous.
It is. It's a colossal amount. It basically secures BKV's long-term production potential, makes it a much bigger player, and provides a really significant, relatively stable, non-coal cash flow stream for the new company. It diversifies away from coal immediately.
Okay, so big bet on gas as a transition fuel. But BANPU isn't stopping there. They're immediately tackling the carbon footprint of that gas with CCUS carbon capture.
Yes, and this is where they're trying to get ahead of the curve. They've actually made the final investment decision, the FID, for a big CCUS project in East Texas.
Final investment decision means they're committed, the money is allocated.
Exactly. It's happening. The goal is ambitious.
Yeah.
Capture and permanently store 70,000 tons of CO2 every year. And they expect it to be up and running commercially in early 2027.
70,000 tons a year? How does that work commercially? Is it just a cost center for environmental reasons?
No, and this is the clever part. They've partnered with Gunvor, which is a major global energy trader. Together, they plan to market and sell carbon sequestered gas, or CSG.
Ah, so it becomes a product.
Precisely. It's not just about reducing their own emissions, it's about creating a premium product line. They can potentially charge more for gas that comes with a certificate saying the associated carbon has been captured and stored. It positions them at the forefront of that cleaner fossil fuel market.
Very interesting. Okay, so that's the resources pillar shifting to gas plus CCUS. What about the second big growth area, smart energy solutions? You mentioned BS, battery energy storage systems.
Yes, BSS is absolutely crucial. It's rightly called a game changer for how power grids work.
Why is it such a game changer?
Well, traditional power plants are usually either on or off, right? Renewables like solar and wind are intermittent. They don't produce power 247. Batteries, BASS, provide the missing piece. Flexibility. You can store excess solar power during the day and release it during the evening peak, or store wind power when it's windy and use it when it's calm. It stabilizes the grid.
Okay, grid stability. But BANPU seems to have a very specific target market in mind for their ballast projects.
They do. It's very strategic. They're explicitly positioning their big battery projects to support sectors with absolutely massive, growing, and often spiky electricity demand. Specifically AI and data centers.
The power hogs of the modern economy.
Exactly. These facilities need vast amounts of reliable power, instantly scalable. BANPU is essentially aiming to build the high-capacity energy infrastructure these industries need, particularly in strategic markets where they're expanding rapidly. It's like building the energy equivalent of fiber optic cables directly to these high-growth sectors.
That's a fascinating pivot. Moving from selling a commodity like coal to providing critical infrastructure for the tech industry. What's the scale of their battery build-out?
It's becoming significant and fast. The flagship project right now is the Warreen Energy Storage System down in Australia. They've invested in a 50% stake.
How big is Warreen?
It's massive. It has a power capacity of 350 megawatts, MW, and an energy storage capacity of 1,400 megawatt hours. MWH.
Okay, break that down. MW versus MWH.
Think of MW megawatts as the size of the pipe, how much power it can push out at any one moment. MWH megawatt hours is the size of the tank, how much energy it can store, or how long it can sustain that power output. 1,400 milliwatts means it could theoretically deliver 350 milliwatts for 4 hours straight. That's grid scale.
Wow. And that's coming online in 2027.
Expected operational in 2027, yes.
How does that 1,400 milliwatts compare to what they already have?
It's a quantum leap. They do have the Tono BSS project operating in Japan already, but that's about 58 milliwatt. So Warine is more than 20 times bigger. It just shows the incredible acceleration of their BS strategy.
And across all their ventures, through their BANPU NEC-XT arm.
Combining everything, their total BS capacity pipeline is now over 11,130 milliards. And that's alongside their existing renewable energy generation capacity, which is close to 1,000 milligigawatt 969 milliards currently. These are real, tangible assets for the future, all being brought under the new company umbrella.
Okay, one last piece of the strategy puzzle. They're also dipping their toes into future energy minerals, specifically nickel. Why?
Yeah, this shows they're thinking about the whole value chain. It's about securing the supply lines, or at least understanding them deeply.
If they're batteries.
Exactly. They made a relatively small investment, $15.8 million, for just under a 10% stake, 9.62%, in an Indonesian nickel mining company called PT Adi Kartiko Pratama, or AKP.
Nickel being key for batteries.
Critical for most of the high-performance batteries used in EVs and grid storage today. This investment isn't about BANPU suddenly becoming a major mining company. It's described as a first step, a way to gain crucial knowledge and understanding of the nickel market, the supply chain, the pricing. It helps them manage risks for their own massive BS build-out and aligns them with the broader clean energy ecosystem, including EVs that will need the power they generate.
So resources, gas plus CCUS, smart solutions, BAS for A data centers, and now even looking at raw materials, nickel. It all seems to tie back to that energy symphonics idea.
It does. It shows a coordinated strategy across those pillars, funded by major capital, all enabled by the structural simplification of the merger.
Okay, so we have this clear strategy, big investments, a radical corporate restructuring. How is the market, especially the financial analysts who cover BANPU, digesting all this?
Yeah.
Especially considering that volatile Q2 loss.
It's a really interesting picture when you look at the analyst consensus. If you take the data from the Investment Analysts Association, the IAA, from around late October 2025, the overall long-term sentiment is actually very bullish. Something like 85 to 86% of the analysts surveyed had a bullish view on the company's potential. Only about 14% were bearish.
86% bullish. That sounds high. But does that mean they're all saying, buy the stock right now?
No, that's the contradiction. Despite that long-term optimism, the consensus recommendation right now is overwhelmingly hold.
Hold, not buy.
Right. Out of the 7 brokers they summarized, 5 said hold, only 1 said buy, and 1 actually said sell.
And the price target?
The average target price for 2025 was pegged at 5.09 Thai baht, which at the time of the data was only slightly above where the stock was actually trading.
Yeah.
The range was pretty narrow too, from a low target of 4.90 to a high of 5.50 baht.
So the analysts see the potential, the bullish long-term story, but they're hesitant right now. That hold rating speaks volumes, doesn't it? It screams wait and see.
Exactly. It reflects the execution risk. They like the strategy, the gas, the batteries, the merger makes sense on paper, but they want to see proof that BANPU can actually pull off this massive transformation, integrate everything smoothly, and start delivering results under the new company structure before they slap an aggressive buy on it. There's just a lot of uncertainty during the transition itself.
And the current valuation metrics, they reflect that uncertainty too, right?
Absolutely. If you look at recent data, say from TradingView around that time, the price was hovering near 4.50 baht, maybe 4.52.
Okay.
Now, it does offer a pretty decent indicated dividend yield, around 5.5%, which attracts some investors.
That's not bad.
No.
Yeah.
But the underlying earnings picture tells the story of the immediate challenge, tying back to that Q2 loss.
Right. The earnings per share, the EPS, what was that looking like?
It was negative. For the trailing 12 months, basic EPS was sitting at minus 0.46 band.
Negative earnings. So no PE ratio.
Correct. The standard price-to-earnings ratio isn't really applicable or meaningful when earnings are negative. It's a direct result of those first half 2025 losses, heavily influenced by that big Forex charge we talked about.
So investors looking at it now have to value it based on future expected earnings, not the recent past.
Precisely. You're betting on the turnaround, on the success of the merger and the growth strategy, not on the troubled rearview mirror snapshot.
And for investors who follow technical charts, price movements, is that reflecting the debate?
Oh, completely. The technical picture was described as very mixed, messy even. Depending on the time frame you look at, short-term, long-term, the signals were all over the place. Some saying sell, based on recent volatility, others saying buy, looking at potential long-term bottoms. It basically signals maximum confusion and uncertainty among traders.
Are there key price levels people are watching? Support and resistance.
Yeah, analysts noted support potentially near the 4 baht level and maybe stronger long-term support way down near 7.25 baht if things really pulled back, areas where buyers might step in. On the upside, resistance was seen near 4.98 baht, which lines up pretty closely with that average analyst target price of 5.09 baht.
Okay, so a ceiling around 5 baht for now, but what about longer term, if this whole transformation actually works?
Well, some technical analysts were looking much further out. They suggested that if the stock could break through that near-term resistance and confirm a major trend reversal, maybe once the new company is established and showing results the next major resistance level, perhaps even a potential new high target could be way up near 13 baht.
13 baht, that's the same price as the tender offer for BPP shares.
Isn't that fascinating? It's a powerful coincidence, or perhaps a convergence of technical expectations and the fundamental valuation BANPU itself put on the growth engine, BPP, with that tender offer. It suggests that if everything goes right, there could be significant upside.
But that if is huge. Because the whole reason for this merger, the reason BANPU is spending billions on gas and batteries, is to escape the underlying problem, the long-term decline of coal.
Exactly. No amount of charting fixes the fundamental headwinds facing the coal industry. This merger is designed specifically to mitigate those structural risks.
Let's spend a moment just defining those risks clearly. Why is coal seen as fundamentally challenged regardless of short-term price fluctuations?
The risks are massive, and they come from multiple angles. First, just basic demand. Globally, coal demand is plateauing at best, likely declining long-term. Capricorn Research, for instance, expected the average coal price to keep falling, maybe another 5% in 2025, down to around $94 a ton.
So pricing pressure is likely to continue.
Likely, yes. But the bigger killer is regulation and policy.
Right. Governments are turning away from coal.
Dramatically. Even here in Thailand, the Draft Power Development Plan, the PDP 2024, signals a huge cut in coal use for electricity, aiming for just 7% of the power mix by 2037.
7%? That's a massive reduction from historical levels.
Huge. And globally, big consumers like China are targeting major reductions too, aiming for only 5% coal use by 2060. On top of that, you have things like carbon taxes and border adjustments.
Like the EU's CBAM.
Exactly, the Carbon Border Adjustment Mechanism. That directly hits industries that export to Europe, like cement and steel, which happen to be big coal consumers in Thailand. As their costs go up due to carbon pricing, their demand for thermal coal goes down. It creates this relentless, inescapable downward pressure on BANPU's legacy coal business. The merger is really their main strategic path out of that slow-motion decline.
Okay, so summing this all up, it's been a deep dive into a company undergoing a truly historic transformation.
It really has. High stakes.
Let's try to boil down the core tension for everyone listening. BANPU, the company built on coal, is executing this incredibly complex restructuring the merger, the specific share swap valuing BPP higher, that expensive 13 baht tender offer, all to accelerate its escape from volatile, structurally declining coal revenues. And that urgency is being fueled by immediate, very large investments into what they hope are more stable or higher growth areas. Natural gas with the Bedrock deal, cutting-edge carbon capture, and particularly these massive battery storage systems aimed at power-hungry sectors like AI and data centers.
And they're doing all this despite that recent backdrop of reporting significant Q2 losses, even though we know those losses were heavily skewed by temporary non-cash currency effects.
Right, so connecting the dots, as you said earlier.
I think the whole restructuring fundamentally is about two things: internal efficiency, getting rid of duplication, and external clarity, telling a clear story to the market. It creates one single company, hopefully more agile, focused squarely on growing the non-coal side.
A unified front.
Exactly, a unified front that's essential not just to ride out things like that $75 million Forex hit, but more importantly, to actively fight against those long-term structural declines and regulatory risks that are just strangling the coal industry worldwide. It's setting the stage for this new company to even attempt long-term survival and, they hope, prosperity.
It is a compelling story of corporate evolution, isn't it? A necessary metamorphosis. They're not just waiting for coal to die out, they're proactively spending billions to try and embed themselves right into the future energy system.
They are. But, and this is the crucial final thought we should leave you with, that pivot, that massive reallocation of capital away from coal, it doesn't eliminate risk. It trades one set of risks for another.
Explain that. What are the new risks?
Well, they've deliberately swapped some exposure to, let's say, relatively predictable, even if declining, commodity price cycles in coal and gas, for exposure to the incredibly fast-moving, highly competitive, and technologically uncertain world of energy infrastructure and tech.
Particularly with the big bet on batteries for AI and data centers.
Precisely. Think about it. They're investing heavily in today's lithium-ion BESS technology, specifically to serve industries known for rapid change and fierce competition. What happens if tomorrow, or in a few years, a breakthrough occurs? Cheaper, more efficient sodium-ion batteries become commercially viable, or solid-state batteries arrive faster than expected.
Their huge investment in current tech could become obsolete, or at least less valuable very quickly.
That's the new risk profile. How exposed will this new company's long-term profitability be, not just to energy prices, but to the sudden arrival of disruptive, next-generation battery technologies that could instantly devalue their multi-billion battery BSS investments? They've effectively exchanged the risk of coal's slow decline for the risk of potentially rapid technological disruption in batteries and AI infrastructure. That, I think, will be the ultimate test of this new company's agility and foresight.